Hey guys, again, everything new under the sun here. Taking a look, this is a zero hedge article, and I got two articles, and we'll just review quickly. And this is again a market update in a sort, so that we can see how the banks are doing and just get an up to date as of Friday, July 8th, how the banks are doing. Are they insolvent? Are they near collapse? What are they doing? Like I said, this is zerohedge.com. Europe's bank crisis arises in Germany. 29 billion Bremen Landesbank on the verge of failure. We most recently reported on the latest European banking crisis. Yesterday we observed a surprising development involving Deutsche Bank, and I got another article about that which we'll do as well, namely the bank's decision to quietly liquidate some of its shipping loans. As Reuters reported, Deutsche Bank is looking to sell at least 1 billion of shipping loans to lighten its exposure to the sector, whose lender face closer scrutiny from the European Central Bank. They're looking to lighten their portfolio, and this includes toxic debt. It makes commercial sense to try and sell off some off their book. They're trying to make themselves look better. They're trying to quietly, maybe calmly, get into a better position, and I don't know if that's going to work. This confirms what we had long speculated, if not confirmed, namely that German banks have some of the biggest lenders to the shipping, are some of the biggest lenders to the shipping sector, and we know that the Baltic Dry Index, the index that monitors shipping, for example, from China to U.S. and back and forth, all the goods produced, we can know how much stuff people are buying by how well the shipping sector is doing back and forth from China to countries, basically, because they are the producers in this current world. Deutsche Bank, which has around 5 to 6 billion worth of total exposure to the shipping sector, they have 5 or 6 billion. And now it's appearing that some shipping loans gone very bad could be the catalyst for Europe's banking crisis. So is the shipping loans a catalyst? Before it was the toxic assets of the mortgages in the U.S. that kind of triggered a lot of problems. And now it could be the shipping loans, because it is in Germany where we find what may be the next domino to fall as part of Europe's latest banking crisis incarnation, Bremen Landesbank. Several weeks ago, the German Landesbank was considering taking full control of its smaller peer, Bremer Landesbank, which is struggling under the weight of portfolio of bad shipping loans. So a whole bunch of bad loans that people aren't paying, people are going bankrupt on. The banks are held with this debt, and maybe they gave it out too easily or whatever. But now they're insolvent because they have all these bad loans that are never going to be repaid. And ultimately, all the world's debt is never going to be repaid. Most analysts agree that it's going to be reset to zero. Everybody's debt is going to be reset to zero, and we're all going to start from scratch again in a new fiat currency. And there's going to be a big wealth transfer. The rich are going to be rich and even richer. The poor are going to have absolutely nothing. And that's the wealth transfer that Gregory Mannarino speaks about on YouTube. Bremen-based bank had 29 billion in assets at the end of 2015. In a statement 1 month ago, Nordelby's chief executive and Bremen's finance minister, Karen Linnert, said the BLB's owners, Nord-LB, the city of Bremen, and the Savings Banks Association of North Westphalia, have agreed to keep BLB's capital intact and at appropriate level. The form and size of the capital increase are currently being intensively discussed. The market quickly read and internalized the news, then promptly moved on. After all, with bigger backers set to rescue the bank, there is nothing to worry about. Just one problem. That may no longer be the case. In an article released moments ago by Germany's Handelsblatt titled "Capital Increase for Airline Landesbank is Questionable," the German paper writes that shipping loans have brought Bremer LB into distress, and the bank cannot survive without government help. Now they're talking about a complete bailout, but a direct capital injection from Lower Saxony now looks unlikely. So these banks are in trouble, and this article is suggesting another 2008 style bank bailout, too big to fail bank bailout. Whose money is that? That's going to be the taxpayers, and what the taxpayers can't pay, it's going to be the future taxpayers, your sons and daughters, and their grandchildren. And what their grandchildren can't buy, it's just going to be money printed out of thin air that none of us have, and that none of us will ever pay back, likely. And that is the state of affairs in the world. Let's look at this one this is Business Insider .com as well again. Deutsche Bank is coming unglued. Deutsche Bank, the most important net contributor to systematic risks. As the IMF put it last week, the IMF specifically, last week, after a leg of several years is having a rough time, shares dropped 4.2% Wednesday to close at a new 3-decade low of 11.63 euro, down from 48% since July 31st last year. It's not the only European bank in trouble. Credit Suisse dropped 1.7% to a multi-decade low, down 63%. Other European banks are getting mauled too. The European Stock 600 banking index dropped 3%. It goes on. Bad news. Deutsche Bank is so shaky, it says down here, that German Finance Minister Wolfgang Schäuble found it necessary to stick his neck out and explain to Bloomberg in February that he has no concerns about Deutsche Bank. So they're trying to talk up the banks, suggest that there's nothing wrong. At that time, CEO John Cryan, whose main job these days is propping up Deutsche Bank with his rhetoric, again, just talking up the markets, explained ostensibly to Frazel's employees that the bank's position was absolutely rock solid. And if that is not an absolute all-out lie, if the stock share prices and these stories are to be believed, these employees have a huge amount to be worried about. The bank is using market conditions to buy back these bonds at attractive prices and to cut debt. CFO Markus Schenk said at the time, by buying them back below their issuance value, the bank is making a profit. The bank is also using its financial strength to provide liquidity to bond investors in a difficult market. So lots of trouble. Here's the Deutsche Bank bonds plunge. You can see the plunge, and then they're buying back, and it goes up, and then it flips right down again. So obviously, I'm going to quit it here. The video's getting long. Short story is that these banks are in absolute trouble. These are going to lead to the next European bank bailout. The two big failed banks, Deutsche Bank and this other Landesbank. There will be bailouts here. Where's the money going to come from? They're going to print money out of thin air. And how long do we have confidence in the fiat currency? That is up to the public and the banks to decide. Basically, when we run out of confidence and when we get fed up with this, that's when the market crashes, and it will cost $100 for a loaf of bread, as is biblically foretold. And then we'll see an absolute crash. So things are just so unstable right now, so top heavy, that things are going to crash soon. And probably it is probably leading up again to a fall period crash. So I think that's what we're leading to, because everybody kind of takes vacation a little bit from the stock market in the summer. And so July, August, start getting ready for things to look scary in September, October timeframe, as it was last year. And we all expected something to happen last year. It's inevitable. It has to happen. It has to happen one of these years. And it's looking more and more likely that it's going to be this year. But again, can they kick the can down the road? Can they keep printing money indefinitely? They cannot. But they certainly are good at kicking the can down the road. But time is running out, and these big banks are providing tells. Apparently, Wall Street is telling people to stay out of the markets. With the big banks buying gold and silver, that's trouble, and people are going to safe havens. So prepare. Do whatever you think you need to prepare. Gather this information, be wise about it, and get ready for what's to come. And I think this could easily kick off the biblical end time scenarios, especially a complete world economic collapse. I've said it before. I think the one of the most obvious things, maybe the only thing that could really push us into a one world government and a one world currency, is a complete and total economic collapse where all countries collapse at all the same time. And I think that's what these articles are gearing up and pointing at. I think we'll see the markets do this sort of thing, and maybe in the fall period. because we are certainly in troublesome times. Pay attention, guys. I hope you know Jesus Christ as your Lord and Savior. Ultimately, He is our only hope. This world is passing away. We know the Lord's returning soon, and we also know there's going to be a lot of trouble in the world prior to that time. So look for an economic collapse to trigger all the birth pains to really kick off and start happening real quick. Thanks for watching, guys. We'll see you in the next video.